Hey everybody, this is Jose Blasco. This is a sound check. We're 20 seconds away before starting the session. I just wanted to make sure that you hear me well. I believe all should be good. But as always, I'd like a quick confirmation on the chat box if that's okay, so we can start on time. Thank you so much. 5 seconds to go. Almost ready to begin. That's it. So it's time to begin the session, everybody. Welcome to the session. How are you? Here we go. We are live. My pleasure to join you guys. I still like to have a bit more confirmation that sound is good. Again, I think all should be okay. Yeah, sound is good. Very good. Perfect. Nice. Wonderful. Let's begin. Everybody. July 23, 2020. My name is Jose Blasco. Welcome to the Get Together longer term session. I will be leading the session today. Today, we're going to be looking at options markets. We're going to be looking at options on equities. We'll be looking at directional opportunities, non-directional opportunities as well, and basically planning for trades that meet our rules, both in the directional and the non-directional aspect. As long as the rules are met, we'll execute the trade. If the rules are not met, it's very simple. We'll just go search for another opportunity with a different stock or a different ETF until all it's perfectly lining up what we want it to be, because basically meeting our rules equals higher odds in our favor. Not meeting rules equals improvisation, and improvisations offense equals random action, and random action equals random results, isn't it? Very good. Nothing that you don't know if you are attending the sessions in a regular basis. Okay. Anyway, so I'm looking at the hellos I got. How are you, Fairmont? Mark, how are you, Leland? Good to see you all, everybody. And if you're watching this recorded, a pleasure to have you too. I just have one thing to go before we go, which is to read the disclaimer, and then we begin. So disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive when using our products. And that's the introduction. Session is officially now introduced, and therefore we are now ready to begin the trading. So how do we start? What do we do? Again, it's all about being mechanical. So we follow the same process every time. That process brings us to the scan. We are running multiple scans, isn't it? The scans we care the most about in the longer term sessions are the ones below. Okay, where we are looking at directional opportunities, directional long, directional short. And then the bottom part is all about credit opportunities, which you could think about them as non-directional, but really we differentiate between purely non-directional, meaning that we expect the market to stay in some sort of a range. We call that ND, non-directional. Or if we expect the market to not to fall, and we don't know if it's going to go up, but not to fall too much, we call that neutral long. If we expect the market to not to rally, not really fall much, but not to rally too much, so then we call that neutral short. Okay, so basically we have three types of credit opportunities in the bottom and two types of directional opportunities, which are debit options trades. And we will start the day with looking at the non-directional opportunities. These are the trades that, based on emails that I receive from you and so on, it seems that you guys are executing the most, and therefore I'll start from there just to accommodate to you guys. Mark, just run the non-directional and have 13 symbols. Yeah, I have 13 symbols too. I run it hours ago before the market opened, but yeah, it's nice to see that we have the same quantity of symbols. Okay, so I'm gonna sort these based on the price. But anyway, before I get into that, I want to review the trades that we have running as we speak. So Signa Corporation, this was a non-directional trade that was an Iron Condor that we put together on July 19. Last Friday was July 17. We met on Thursday. We didn't meet on Friday, so I was keeping this chart to share with you. Price reached our vertical line being July 17 last Friday, where price stayed within the statistical range that we were expecting, the purple box. So if you had executed this trade, that was a profitable trade. Not the same with Gilead Sciences. Gilead Sciences has been one of those boring trades. Okay, since we entered, I don't remember exactly where it was that we entered, but basically, if you look at price action, it's been going up and then down and up and down, and it really what a sideways market. It really went nowhere. And therefore, if you were to look at the P&L that we have in the account where we executed this trade, you will see a negative P&L. Not only that, if I remember well, this particular stock is about to have their options expire. Beyond that, I will also check the earnings report for Gilead Sciences, and you will see that earnings are happening on the 30th of July. Okay, so earnings have not happened yet. The option that we have on Gilead Sciences is expiring tomorrow, July 24, and we paid 198 to buy that call. Basically, we lost almost the whole 198. We are currently on the wire by 196.5. So again, if there was to be a magic move to the upside above 80, so we may profit on this trade, this is very, absolutely, really unlikely. And probably this will be a trade that will conclude for a full loss, which obviously is part of trading, guys. The next one that we have here is CVS. Okay, CVS, similar type of trade. So we planned the trade on that day where we had the vertical line. We said if CVS hits 64.56, we're gonna get into the trade. Not only it hit that price, it went way below, then it went way above, and then it's been just basically being funny and not doing much. Okay, so if you look at CVS in the account, so that particular stock is showing a little bit of pain, $72.5. Okay, that one still got 29 days to go. Okay, so when looking at earnings for CVS, okay, so CVS is supposed to report earnings on August 5. August 5. That the expression that we're using is August 21st. Okay, so what could happen? Okay, certainly the trade has not worked in our favor, but what could happen, and this, to be honest, could easily happen, is even though we don't have clear probabilities in our favor, but this is something that could happen. Is that the earnings reports are public now, and the stock jumps aggressively and moves from being really, really boring to giving us a very powerful move, and we start profiting. If that was the case, immediately you would want to kill the trade, okay, and collect whatever profit that is. I don't think it would be too much given the amount of time that has passed, unless you have a spectacular move to the upside. But if you do get that move, just get out and conclude this trade. That would be the plan. Okay. By the way, in the meantime, with CVS and Gilead Sciences, while these trades were not performing well, there are other trades that we had that we closed for nice profits. Okay, so this is how you build a portfolio. You always have multiple trades running in parallel at the same time, where some perform very well, some not so well, and some lose a bit, where some lose a lot, right? And altogether, you end up having your specific results. Okay, and Nike as well. It's a little bit of an undecided stock at the moment. So that day we planned the trade. Okay, and we said if Nike hits 97.69, we're gonna enter a position with puts, meaning we are betting Nike to fall. We are betting on Nike for Nike to fall, and it started falling actually, but then it came back up, and now 3 UFOs have formed. So this particular stock may end up providing us with a loss. But if that's the case, probably other stocks like CVS, for example, may continue rallying, and next thing you know, you're going to get a profit from the other ones. So again, stocks offsetting stocks in a diversified portfolio. Okay, Roku. Roku is a trade that is looking good. Again, this is a credit spread that we did, selling the 115, buying the 114. Expiration date is July 31st, as you can see below. Let me do this. Let me move the candles a bit to the left. Okay, so July 31st is the expiration date, as you can see here below, hence the vertical line. Okay, and as long as Roku stays above 116, actually above 115, then we're gonna have a full profit on this trade. So it's looking quite good, really. We just need to survive another week, which looks quite likely given the distance from the purple line below and the current price. Okay, but again, we'll assess that when the time comes. Okay, Caterpillar. Okay, this was a stock that was a bit challenging a few days ago when we went above the expected range. Okay, but we also said there were more UFOs above, and that was going or was likely going to bring the price of Caterpillar back down inside the range. Okay, so we are now back in profit with Caterpillar, and if tomorrow, which is the expiration date, we stay inside the purple area, this is going to be a trade concluded for a full profit. Okay, again, I am looking at those trades in a way where you do the trade and you close your eyes, okay, and you do nothing. There is no trade management with those iron condors. Certainly, you could be more active with it, okay, and someday we'll have to conduct special sessions on that, where we can talk about, I mean, we already discussed some of those possibilities in the channel. You can look at the sharpening playlist, and you will find things such as damage control, gamma hedge, and things like that. So you can look into all of that and watch all those videos. But basically, what we have here, it's a stock that you could have managed and exit this trade early on and end up for a profit, or maybe today you can just exit this trade. It's going to be a partial profit. So if I look at Caterpillar, okay, if I look at Caterpillar, I don't have it in the account, but if I don't mistake, I have it in the simulated account. Yes. So we collected 15 cents for that credit spread. Okay, I did fix that value there. So currently, if you were to close that stock, okay, at market price, you would make $6. So if you were to try to shave the spread a bit more, and instead of exit at market price, you were to exit a little bit better than the market price, then you could make potentially a bit more than that. Okay, so this is something that you could certainly attempt if you are into trade management. And the last one is ATVI. Okay, so ATVI is another stock with expiration tomorrow. I believe that for this one we were using pre and post market data when we were planning the trade. So yes, correct. So you can see that particular stock is inside the purple area, is reacting to a red UFO. This is potentially going to bring it down. And if it brings down and stays a little bit more there, okay, we're going to reach 724, which is tomorrow. And as long as we stay in the purple area, then this trade will conclude for another full profit. That was an iron condor as well. I believe I may have, I'm not sure about this one, to be honest. Maybe I did set the value there. Did I set the value? No, I did not set it. I did not set it. This is the current value. Okay, so 55 is the current value. So I did not set that one. So my bad. I don't remember the credit we collected here. I believe it was 40 cents, if I'm not mistaken. If I'm not mistaken, I think it was 40. I'm not fully sure. Okay, so again, this trade, it's more or less likely tomorrow to be a profit, but again, we'll have to wait for that. So we will review that later on. Cool. With all of this said, let's begin with new trades, okay? Which is the real exciting part of the sessions that we do, I guess. Even though you guys gave me confirmation the other day when I asked, you guys are happy when I review the trades, and you said yes, please keep doing it. So I'll keep doing it, okay? But let's begin with Shopify. We are loading this stock, looking to put together a non-directional trade. Like we did some time ago, as you can see here on based on the purple drawing that I have on my screen there. I'm waiting for the data to be loaded. We have a PD pending data sign on the screen, so I'm just gonna wait a bit more. Come on, so we can begin. Here we go. So we have it. So now with pre and post market data, I get 49%, and I got multiple UFOs above and multiple UFOs below. If I look at regular session data, 49 becomes 52, and I have multiple UFOs above and I have multiple UFOs below. Okay. So in other words, we do have a trade setup that it's inviting us to look deeper into it. For sure, before I get too excited, we need to look at Shopify. We need to look at the earnings date for Shopify, which is July 29, and that is not a very good news. And the reason why it's not a very good news is because July 29 happens to be next Wednesday. So the only way to do this trade would be to use tomorrow expiration. Okay, tomorrow expiration. We cannot use July 31st. We have to use tomorrow expiration, and we're gonna give it a try because it's a $957 stock. So we may get enough premium to do the trade for tomorrow. But normally those trades that you plan for the next day, as a non-directional trade are difficult to make work. Especially Shopify is not the most liquid stock in the world when it comes to options, even though it's okay. It's normally not the most liquid stock. Okay, so we're gonna give it a try. It's worth it. Most of the times when we try one day trade like this, we get a no. Okay, and so this is likely to happen. But at the same time, if you get a yes, that basically means that you have a trade which is very likely to work, because basically surviving one day of risk, it's normally very little time. So those trades normally are powerful. The challenge, again, as I said, is that you will not always be able to make it work. Okay, so I'm just gonna right click anywhere in Shopify and analyze and sell an iron condor. So that way I will now be able to come here and notice from prior trades I have selected already plus 1 standard deviation, minus 1 standard deviation. And what this tells me is that when using July 24 expiration date, the plus one standard deviation is 1010 and the minus is 924. Okay, so what I'm gonna do with no thinking is to go ahead and draw a line, a dotted line. Let me do that again. I'm just gonna make the dotted line on the top to be 1010. I think 1010 was there. Here we go, somewhere there. And then I'm gonna have another line which was 924, I believe it was, which is somewhere here. Okay, good enough, I would say. Okay, so from today until tomorrow, price is likely going to stay between those two dotted lines. That's what statistics suggest. Therefore, an intelligent choice would be, we always use 2 UFOs as a minimum, isn't it? So 2 UFOs above will be pointing at that UFO on the top. If I was to look at pre and post market data, which is also a possibility, okay, 2 UFOs above, actually it's a bit more aggressive and would be here. That's 2 UFOs above. Okay, 1034. Okay, and if we look at UFOs below, so now we are looking at those UFOs right here. Okay, 1 and 2, 816, and yeah, and again, this one is there too. And the reason why I'm drawing it is because really when you look at the vertical distance between the current price to the 2 UFOs below, okay, so this line represents the vertical distance and I project it to the top. So really, to be really in the middle of the range, I would need to have a UFO all the way here on the top. So again, let's go back to the regular session. I don't need to be exactly in the middle, but it's more convenient. So yeah, I don't, right? So but my point is that that first purple line at 1034, it's certainly far from what the midpoint would be. Okay, so if I was to attempt this trade, I would be relying on 1075 and 816, and the big question is how much I get paid for the 1075. That's the big question, because if I get paid enough, then that opens the door for us to plan the trade, and if we don't, then we don't. Okay, and in this case, we are being paid 62. Okay, we are being paid 62. Now liquidity is not so good any longer here. From 35 to 90, we got 60 cents. Okay, so liquidity is problematic, and then the next strike is even worse, 25 to 105. Liquidity is not good at all. I mean, think about it. If you were to sell the 175, the 1075, and you were to buy the 1080, you would basically be paid 62 and have to pay 65. So you would not be able to do this for a credit. You would actually do this for a debit, which is absolutely not what you want to do when you do an iron condor. An iron condor has to be credit. If not, you are guaranteed a loss, right? So we are not going to do that. And therefore, as I was expecting, we got a no on the Shopify trade. And the reason why we got a no is very simple. This trade, again, this trade was not good enough, given the fact that we were forced to use tomorrow expiration date, given that earnings were happening on the 29th of July, if I'm not mistaken. So in this sense, we move to the next symbol, which is now. And with now, I believe the problem, I think we had a problem before with now. And I believe the problem was that now is making all times high. So in most cases, we are having only one red UFO. So one red UFO, that's not enough. If I switch to pre and post market, we have none. Okay, so certainly not enough. Okay, and I'm having a little bit of a problem with my lighting here, guys. So just give me 1 second if you don't mind. I need to do some tweaking to my lighting because I'm not sure what's happening here. 1 second. Okay, so I guess I'm gonna have to check on that later on, guys, because I guess that there is a problem with a connector or something like that. I got a little bit of a flashing light randomly from time to time. So sorry for that. I'll just keep going for now. Okay. So again, not enough red UFOs. We only have one, and that way we're not gonna do it, and therefore that will drive us to go check Facebook, which may be a similar situation. Well, actually, look at that. We got two UFOs last time I checked. There was only one. We got 50% if we look at regular session. Pre-post market provides with 49%. Yeah, but the problem is that it's not possible to be equal distance from the two UFOs. Okay, so if I draw a line here, right, and I calculate the vertical distance from current price to that line, and I project that same distance below, I kind of get to here. Okay, and here there is no UFO, and if I was to point at the second UFO, I need to go all the way there at 207. And yeah, so it cannot work. Okay, it's not gonna work with Facebook. So let's check PayPal. PayPal normally has interesting levels of both liquidity and premium. So let's see what's going to happen with PayPal. Uh, Another stock making all times high. Okay, so be careful in that sense. Okay, notice basically double its value in no time. This is just amazing. The world in which we live, the craziness that is happening out there. So when looking at the 55-minute time frame with pre-post market, we got 50%, but we got only one red UFO. When looking at regular sessions, we have 47%, which is not enough. And anyway, we only have one UFOs as well. So no good setup with PayPal. So we're going to be looking at Beyond Meat. With Beyond Meat, we got 45%. If looking at a regular session, when moving to pre-post market, we get 48.99%. And this certainly allows for non-directional trades. So let's check with Beyond BYND what the earnings dates are. Okay, and feels like today I'm teaching the session and I'm in some sort of a discotheque or something like that with a flashing light. Again, sorry for that. Thank God it's just random and it's only from time to time. So August 4, that is the earnings date for Beyond Meat. And that's a good news because August 4, basically being Tuesday, allow us to use the prior Friday, which is July 31st. Okay, so let's take a look at Beyond Meat. This is not the most liquid stock in the world, but certainly is an interesting price point, isn't it? It's a stock trading at $129 per share. So this may give us options, okay, when it comes to strike selection and enough premium. Again, my only concern here is liquidity. Okay, so we're gonna look at July 31st and see what's possible. Liquidity is pretty okay. And now that I just said that, I got a flashback in my memory. I remember looking at that stock with you guys in a prior week and making the same comments. I have not traded that stock often at all. To be honest, I don't remember last time I traded this stock. And in my mind, it's because I didn't trade that stock that often. It's like the reason is probably it's not liquid enough. And the reality is that liquidity seems fair. So we're gonna go ahead and analyze and sell an iron condor and see if we get something that is tradable in this particular case. So again, looking at July 31st expiration, I get my standard deviations here, which is basically 116, 143. Okay, so let's go ahead and place the lines. 143, 144 is going to be somewhere here. Okay, and 116. Okay, and 116, it's going to be somewhere here. Okay, so in other words, if we were to do this trade, we can rely on that UFO, and then we can rely on that UFO. So we have at least two UFOs above and below. So basically, our upper definition of the range would be 146 something. So before we spend more time on this trade, let's go check the 146 something to see how much we get paid for that option and see if it justifies the trade or it doesn't. I don't think it will. Maybe yes. Let me see. 146, actually it does, it really does. So the 146 is paying us $1.11. Not sure how I was thinking about it. I was really not well in line with the pricing of those options. So 111, it's certainly more than 35 cents. 35 cents, it's the minimum we need, isn't it? So 106, 107 now is certainly a valid choice. Okay, so let's now that we know this, okay, let's go back to the chart and be just a bit more precise, a bit more fine. So again, with Beyond Meat, let me make sure I remember this correctly. I said with the pre-market and post-market we got 48.99, which is good. Regular session I think was not good enough. Correct, 45 is not good enough, but 48.99 is good enough because our minimum is 49, isn't it? So here we go. What I could do is rely on this UFO below, which is 108, and rely on that UFO above, which is 146. Price is more or less in the middle of the range. If we do that, not exactly in the middle, but more or less in the middle, good enough. Hey Ahmed, how are you? And this would allow for potentially would allow for a trade. Okay, so the trade will be planned as of today, and if all is good, executed as of today. And this is a trade to be kept all the way into July 31st, which is right there. Okay, this will be the place. Okay, so in other words, our bet would be that the stock would remain trading from here to here. Okay, so we are expecting the stock to remain in the purple area, and if the stock does remain in the purple area, vertically and horizontally speaking, then this trade would be a full profit. Okay, so all of this is looking good, but again, let's not get too excited. So how are we going to build the trade? So we're going to be buying the 145 call, 147 call, and selling the 146 call. Okay, we said we're going to be using July 31st, 2020 expiration date. Okay, so that's for expiration. We said earnings. Okay, earnings are on, I think I said August 4. Okay, August 4. Let me double check. Of course, this is relevant information. I don't want to make a mistake. Yes, August 4. This is what we have for Beyond Meat. And therefore, we now need to set the options below where we said we would sell the 108 put and we would buy the 107 put. At least that would be my initial planning for this Iron Condor. This is how I would structure it. So my options are above the UFOs and my options are below the UFOs. So as long as I stay in the purple range, then I'm fine. Okay, so let's get into adjusting this. So 146, 147, that's what we're gonna do on the call side. So 146, 147. So 146, 147. And with the put side, we're gonna go 107, 108. Here we go. So we have it. And now the question is how much we get paid. Okay, and I'm very disappointed when I look at the premium we collect. I want to go ahead and take a look at those puts. The 108 and 107. What's happening to those puts? Why do I get paid so little? Well, it's less than 35. That's 32 is less than 35. That's a problem. Yeah, but also the differential. Okay, it's very little, 32 to 29. So I get paid 32 and then I have to pay 39. So the differential is very, very, very poor. And therefore the trade is not working. It's not working. If I use strikes below, like 107, 106, the differential is still 28 to 25 is 3 cents. If I do 25, 23, that's 2 cents. Okay, 23, 20 is 3 cents. 19, 17, 2 cents. So it seems to stay as 2 cents. Only if I go higher, 40, 45, 5 cents, okay? 45, 51, 6 cents, 51, 58, 7 cents. So only if I come higher, I get better premiums. But if I go that low, all the way to the 108, really I'm not being paid enough, and the differential between strikes is not enough, and therefore is not working well for me. So I'm not going to give up yet. I am not going to give up yet. I'm just thinking about possible alternatives. So again, let me take a look at this. Okay, so let's try something. I'm not sure it's gonna work. I would say probably not, but I'm gonna try something. Let me put it on the chart first so you understand my thinking. So if 146, 147, that one is good, but 108, 107 is not producing premium enough. Well, one way to increase the premium, okay, would be to go ahead and increase the distance between strikes. This is not ideal because by increasing the distance between strikes, you also increase the risk. So now 108, 106, okay, that means that now you have $200 of risk instead of $100 of risk. Okay, so it's certainly not ideal, but if you get paid enough premium to justify the risk, then at least we're gonna save the trade. So let's try to save the trade and get a yes instead of getting a no-go. Okay, and we're gonna do that by doing 146, 148 above and 108, 106 below. So let's try that. 148, 146 and 108, 106. Okay, so if we do that, we got 24 cents, which is double than 12. So that is not working. Okay, it's not working because we double the risk and we double the premium. I was hoping to double the risk, but at least triple the premium, and then it would have worked. And the reason why I'm saying it's not working, maybe I guess I should have explained that before, is because the other rule we have is that we look at the strike price distance. Okay, the distance between strikes, I should say, because that's your raw risk. In this case, is $2. And in order to accept the trade, we want to collect at least 15% of that in premium. Okay, at least. So how much is 15% of 2? It's 30 cents. And how much you get paid? 24, which is less than 30 cents. And therefore, the trade cannot be accepted. We are not being paid enough. And it's a shame, guys, because that was looking, I was concerned about the call side, and actually the put side is the one that has been problematic. Okay, so in the end, we will not be able to go with Beyond Meat. So let's look at Baidu. Okay, let's move into the next one, Baidu, and see if that one is going to work. So pending data. So let me check earnings first. So Baidu, we are talking about August 4, same exact. So we'll be using July 31st if everything is good. We got 44%. That is not acceptable with pre-post market data. What about regular session? We got 43%. That is not acceptable either. Well, actually, we got pending data. So let me wait. Give that stock a second chance, even though it's not looking good. Let me see. Pending data. Here we go. We got 44%. It's not looking good. We need 48% minimum for the non-directional trades. Okay. So get into Tiffany's now. Tiffany's is producing an amazing performance, 58%. That's really, really amazing. So what about the earnings for Tiffany's? When are they going to happen? They are supposed to happen on the 31st of July. So really the only way to do this trade would be to use tomorrow expiration. And that is not that high priced stock. $121 is not low, but it's not that high. So I'm just going to leave it alone, okay? So we look at NXPI, okay? And let's take a look at that one. Pending data. So waiting for the data to be loaded on our screen. We got 43%, not acceptable. What about pre and post market? 40%, even less acceptable. So we'll move into FISV. 43%, not acceptable with pre-post market. What about regular session? 53%, that is beautiful. Okay, now the UFOs are so far away. I mean, if we could do this trade using the 113 and the 93, that's a beautiful, beautiful trade. What a beautiful range. But we do need earnings to not to happen anytime soon. So FISV, didn't type it right? Oh, okay. I had the filter selection for futures. Got it. So earnings here are happening on August 5. I would need to use July 31st expiration for such a wide range. To be honest, I don't think I want to get paid enough for the 113. But let's try, because if we do get paid enough for FISV using July 31st, then that's a really, really beautiful high probability trade. And it'd be nice to put it together. But again, how much we get paid for that? Well, yeah, you can see 12 cents. It's too far. Therefore, we don't get enough premium. So let's move to the next one, which is American Express. Okay. Uh, that stock normally it's a bit problematic with liquidity of options. Almost always I traded it. I struggled a bit with liquidity. Um, Interestingly enough, though, because it's a very large company, 38% that's not good enough with a regular session. What about pre-post market? So pre-post market is 36, is even worse. So ATVI, we have a trade running already and it's expiring tomorrow. JD, so pending data, so waiting for JD to be loaded. 47.58, not good enough, not acceptable. Regular session 45, pending data. Let's see what's going to happen, but it's not looking good. 45.87, that's 45.60, so no good. And BUD, so that's the last one in the list. So let's see if that stock will give us an opportunity to trade. Curious to check at the monthly time frame. Yeah, that stock is actually very, very low. Very, very low. This stock has been absolutely massively killed in recent times. So going back to the 55-minute time frame, we got 42% with regular session data. What about pre-post market? Sorry for that. Pre-post market is here. It's 38%, which is even worse. So we are not going to touch it. Okay, so basically we are done with the non-directional opportunities we had. I'm not sure, Mark, if maybe you had another stock in your search, since you said that you had 13 like me, but maybe you had some other symbol. With my list, basically we got a no with everything. We went very close with Beyond Meat. Okay, I thought we would have a trade there, but then I got very disappointed on the put side, and then we didn't have a trade. Okay, so I'm just gonna go back to directional opportunities. Okay, and continue looking for a trade in the remaining time for the session. We still have 10 minutes to go. Let's see if we can find a trade in this market. Okay, so I want to be a bit picky here and think of liquidity. So FedEx normally is liquid. Well, to be honest, there is a collection of stocks on the top that are pretty okay, including the SPY ETF. Okay, which is normally a market that we don't trade because we tend to avoid ETF when we run the session. Nothing wrong with ETFs, guys, absolutely not. But normally when we do the credit trades, we avoid them because they pay less premium. So we could certainly plan a trade with the ETFs, directionally speaking, nothing wrong with that. But I'll be looking at the stocks just because we are building diversified portfolios, and you always want to have some stocks long, some stocks short. If you get an ETF in your portfolio as an active trader, then you got the diversification. Let me say that again. The diversification is kind of built in that ETF. So then adding more stocks to the portfolio doesn't make sense somehow. So in other words, I will look at ETFs more as a tool for the long-term investors, more than for what we're doing here, which is longer-term trading, but still active, isn't it? So UNH is not a good one because climate is pointing at 8 candles in the current climate, where statistics suggest 6. So it's a bit extended. What about FedEx? FedEx, it's showing us a market that went too far too fast. Okay, 16 candles, where statistics would suggest 6. Johnson and Johnson. Let's take a look at Johnson and Johnson. Johnson and Johnson is in a 14 candle climate, where statistics would have suggested 7. Okay, so a bit late to the party there. XLV is an ETF. CVX, we have one already. HLT. Okay. So let's take a look at Hilton Worldwide. So we are candle number 6 out of 6, which is what statistics would suggest. Okay, so we could certainly take the trade if we were in the entry. On top of that, we got less than 50%. Let's take a look at pre and post market. Pre and post market is 40%. So we need at least 50% for the directional trades. So we're gonna move into Philip Morris. And that one, I like it very much from a climate point of view. Okay, certainly like it very, very much. Two candles, two dots only into what statistic would suggest is going to be 9 candles when it's going up. Okay, so we are catching this stock at an early stage. Probabilities are powerful, 54%. My problem, at least looking at regular data, regular session data, is that 74.66 is my reference price somewhere here, and here there is no UFO. So that's a problem. What if instead of regular session I look at pre or post market, 54 becomes 42, and that is not acceptable. Okay, that is not acceptable. So here it's a matter of being patient. Okay, maybe tomorrow, maybe later in the day, you had a UFO that formed. Okay, maybe that market will, just fall a bit. Okay, to the price we want, and next thing you know, you have a UFO that forms, and now you can go ahead and take the trade. But we don't have that yet, so we need to use a bit of patience. Okay, EFA, XLP, those are ETFs. So I'm moving into Dell Computers, Dell Technology. Climate is good. 5 candles into this climate. Statistics suggest 8. So we are entering at the right time. And we do have a valid entry here, guys. We have a valid entry. Statistics suggest, the reference price for our entry will be 59. So that's good. Statistics, UFO stats are not good though. We need 50%. So let's check pre and post market. And pre and post market is absolutely weak with Dell Computers, interestingly enough. So let's keep going. So XLU is another ETF. So moving into Oracle, which is the next one in the list. Okay, Oracle with 56% probability. That's really beautiful. And my friends, I have to say that I believe we may have a trade here. So let's see what we have. We have 1 candle into this climate. The climate is supposed to last by 6 candles based on stats. This is the nature of that stock. 56 is our reference point. Oh yeah, actually 56 is much higher than what I thought. So 56 is actually up here. I thought 56 would be just a bit lower with that UFO. What is the top of that UFO? Let me see. That's 55, 52. Yeah, so it's half a dollar. Okay, so no good. But let's see pre and post market. Pre and post market is not providing the 50% we need. So almost there. Okay, almost there, but not there yet. So again, with Oracle, it's the same story. Okay, maybe 1 hour from now, watch it, guys. Okay, watch it. Maybe 1 hour from now, you're gonna have a UFO here. Okay, and then you just need a little drop. You get into the trade, and here we go. Oracle begins. Okay, so watch it. The closing time for this candle is gonna be 12:15. That will be like half an hour after we conclude our session. So watch it because you may have a UFO at this price point, and then you have a trade. As of now, I don't have it, so I cannot plan the trade. Okay, that's gonna be homework for you. Coca-Cola. So it seems that people do drink Coca-Cola during the COVID-19. 9 candles out of 6, but certainly late to the party if we want to enter this one. What about Charles Schwab? Let's take a look at this one. I skipped EEM is another ETF. So let's take a look at that one. Climate is good. Okay, 2 out of 6. So that's good. We're entering at the right time. 34.66. 34.66. This is 34.50. Okay, so I would say close enough, especially if the price of that stock drops, the EMA will drop. So instead of 66, maybe 34.50. So that's good enough. Okay, so we do have a valid entry here. Problem, statistics are less than 50, so we cannot accept. What about pre-post market? Pre-post market is 42. We still cannot accept. It's not crazy, but it's not a picky trade, right? I love to be picky. I love to be selective because being selective equal more probabilities. Okay. My God, I guess that today you guys are looking for the session to conclude actually with the flashing lights. I don't know how you feel it on your end, but I guess that it's just a simple thing. Probably it's just I got a connector that is moving. I just need to plug it in properly. It's maybe half in, half out, but it's I never had a situation like that where I got flashing lights while delivering a session. So Uber, loading the chart here. We got 50% probabilities. This is good. We got an ideal climate here. Candle number 1 out of 7. So we are at the beginning of a potential trade. Reference point is 32.63. And 32.63 is just a bit lower than current price. Current price is 32.87. Probabilities are great, 52%, but the UFO is lower. So it's almost like copy paste with Oracle. So watch Oracle and Uber. Pre and post market, 50%, but also the UFOs are lower. So watch it, guys, because both Uber and Oracle may give you a valid trade to be executed at 12:15 a.m. Sorry, 12:15 p.m. New York time. Okay. So I'll go down the list to see if in the end the 3 opportunities we got left are valid. AMLP, I'm gonna say yes but no. It's 6 out of 6, so yes but no. Also probabilities are less than 50, so I would like to look for climates such as the one we have with Uber or Oracle, early parts of a climate, so you can enjoy the whole propagation. We are not having that at the moment. British Petroleum. So what do we have here with BP? So with BP, we do have a good climate. So 2 out of 5. So that's a valid one. But unfortunately, you can see clearly that the current price is trading at 23.10, which is way below our reference price. So, and also notice the crazy value for UFO performance stats that we have in this case. Okay, well, yeah, pending that was being was pending, but still 36% for a stock like BP really makes you understand what's happening in the oil markets, and how all companies are really suffering in current times with no institutional interest whatsoever. Wow. Anyway, ABBV, okay, no UFOs, got it. Thanks for the teamwork there, Mark. So with Vodafone, we don't have a trade either because the climate is currently propagated already to candle 7, where statistics suggest is 5. So again, no good. Okay, so we're not gonna do it. So guys, my friends, today it's one of those days where we went through a bunch of charts, and unfortunately we didn't have any setup that was valid enough. Same thing happened to me the other day with a future session that I conducted, and when this happens, it's obviously not really pleasant. I guess for you as students and attendees of the session, for sure. For me as your guide and coach in this case, definitely not, because while I'm never eager to trade because I just follow rules and I'm just mechanical and emotionless. Certainly when I conduct a session, I do want to provide material for you that is actionable, because I believe that you learn through practice. And therefore I'm always eager to find those trades that you guys could practice with using paper money, real money. To be honest, it's not the same, but at the same time, for educational purposes, you could say it's the same somehow, at least to a certain degree. So therefore, I'm always eager to have those actionable trades. But when we have sessions like today where it's been no go, no go, no go, and then no go, no go, no go, really, it's not fun. But it's certainly a very, very, very big lesson. A very important one, because this is the toughest part of trading, especially when you are new. When you are more advanced, you understand that your job is to take good trades. Taking trades is not your job. Your job is to only take good trades. So if your trades don't meet your rules, you are totally fine not taking them, because the trades available are no good. So I am in peace with that. I have no problem with that. But if you are newer to trading, maybe this is something that you have not understood yet. So while today's session was not a lot of fun, today's session does show that, which is be picky, be selective. Just go one trade at a time until you find your trade. And if there is no trade, you know what? Check the markets 1 hour later, go back tomorrow and trade those markets, because opportunities will be produced. That's for sure. But if they are not available now, forcing a trade, then it's not trading, it's gambling. Trading is taking trades, but trading is also sitting on your hands, and you have to learn both sides of trading. So today is one of those days where I was teaching you the other side, which is sitting in your hands, even though it makes the session to be less fun. Okay, so we will conclude the session here today, everyone. Hopefully it was good. A quick message from you guys. How was today? I mean, I've kind of said it, right? So today was not that much fun, but in any case, how are you guys doing? How is trading? How is life? How was today? How is everything? Give me a little bit of feedback before we say we have a final goodbye and the session is concluded, so I can evaluate where you at in the process of learning how to trade and utilizing the apps and being part of what we do and so on, guys. You let me know how is it going. Okay, and I know it's a bit personal, so I could understand as well that maybe in the YouTube channel you don't feel too good to lay out everything out there. Let's do this, guys. If there is anything that you would like to share with us, with me, and you don't feel like doing it on the YouTube channel, you can certainly email me, guys. Okay, not a problem. I'll be delighted to receive your emails. Jose at tradewithufos.com. So that's my email, JOSC at tradewithufos.com. Just send me an email, okay? Very good, everybody. Super pleasure, as always. Take care. See you soon. See you in the next one. Bye-bye. Take care.